Hello and welcome to Kevin's Corner, our very special speaker series. I am joined here with Joel Davis of Davis and Associates. And to continue our thread, we're going to talk about three main ways of saving money on your taxes. And so before we jump into that, I just want to say, as I always have, that this isn't going to be legal or tax advice. These opinions are just mine and Joel's. They're not part of our respective organizations. And with that, I'll let Joel introduce yourself.
Joel Davis, Davis and Associates. We are a CPA firm in Pittsburgh. Goes back to my grandfather, some third generation. So we've been around for about 50 years.
Good. So kind of like our firm, you're a legacy group, which is always
Correct.
nice to hear.
Correct.
Okay. So at this time of year especially, taxes are always on people's mind when we come up to an election, when we start to get to the end of the year and people have to start looking ahead. So maybe you could start just by giving us what's one of the best ways to save money on taxes?
Right. So I just wanted to lay out a few different things from a business perspective. Many times this is an entity question. So if you're an LLC, are you electing to be taxed as an S corporation? Are you going to be a C corporation, especially with the S, which many of our clients are S corporations for tax purposes? There can be all different types of ways you can save that way. So that is one of the main things when I have clients come in and they are not an S. One of my first questions is usually why. It's not a fit for everyone, but many times it is. That's kind of from a business perspective. From an individual perspective, a lot of the times I have clients come in and they say to me, I say, well, I see you're not maxing out your 401k because actually, despite what you might read in the news and whatnot, really one of the easiest ways to save taxes is maxing out your 401k. And that really should be the first tool in your tool belt in many cases when you're trying to save on taxes. They'll say to me, no, I am maxing out my 401k. But what they mean by that is that they are maxing the match. So maybe there's a 3% match for the company. They'll say, look, I'm maxing the 3%. That is not the max. The max for last year, I believe, was 19,500. So you actually have to think about what that percentage is. If you're making $100,000, that might be 19%. You might only be putting in 3. So that is, many times with clients, I run into that where they think they are maxing, but they are not. And that is really the lowest hanging fruit in many cases from an individual perspective. And then kind of a third, just little fun thing I wanted to lay out there was with the tax change here a few years back, many people who used to itemize no longer do. So, your real estate taxes, your mortgage interest, your charity wasn't enough to itemize anymore. That's still the case. But for the first time in 2020, they have created a above the line charity line. So basically what that means is that every person will be able to deduct up to $300 worth of charity. And so that's kind of a new thing that people need to be aware of because people have now gotten into this comfort level of, maybe I don't need to worry about my charity anymore. It doesn't matter. Suddenly it matters again. So that's kind of a new thing that's out there in 2020 and that people need to be aware of. It's not a huge thing, but just another thing that's out there for them.
Sure. You don't want to lose the money, right?
Right.
So then I take it for anybody who's maybe not using these things right now or isn't sure if they're fully utilizing these options. Do you guys do end of the year reviews? Do you do like a sit down meeting in the fourth quarter, say, here's what you're looking at and here's what we can still do to make it better?
Exactly. Once October 15th passes, because, that's the one time of the year, October 15th to December 31st, where we really don't have tax returns. And that's really when we try to push to clients. This is actually one of the times of the year where I do my most client meetings, and that's already started in earnest this week now, obviously with everything going on, sometimes via Zoom or in person, but where we're really going through and saying, okay, the year's almost up. What are we looking like from a projection wise, and what do we need to do before the year is out? And so that is a main concentration of us here in this last 10 weeks of the year.
Perfect. Okay. So then, good. So that sounds like good advice. So then first it is, if you're a business, take a look at your organization tax structure. What kind of
Correct.
elections have you made?
Correct.
Second is max out 401k.
Right. A true max.
does that make the same sense as the IRA? Does it work the same as an IRA as opposed to someone like a 401k?
It's very similar, except the IRA has a much lower limit, both in the sense of dollar limit and in an income, what your income level can be and still use an IRA. So the 401k, assuming you have one at work, is just a better vehicle overall in most cases.
Okay. And then third was make sure you take advantage of the charitable deductions over the standard.
Correct. Think about this thing. It's maybe kind of gone out of your tax thinking every year over the last few years of, oh, I don't need to worry about charity anymore. Look, it's back. Everyone's going to be able to get it. So, whatever those receipts are, or if you want to do something before year end for $300, good time to think in that way.
Absolutely. Absolutely. And good for the charities too, because everyone needs it right now anyway.
That's right.
Okay. Well, perfect. Well, if you have any final thoughts that you want to share, I certainly by all means, feel free to share them, because I think that was an excellent overview and certainly a lot of things that people can take advantage of.
Sure. Only my final thought, which I kind of want to throw in here, is I think as we have the election coming up and things changing, one thing I really think will change on the maybe almost regardless of who wins is that audit rates for the IRS are at all-time lows. We basically can't get any lower. So when we do tax returns, we do it in a way where we're really trying to tie out things to third parties, bank statements, reconciliations, what have you. As we believe that audit rate will start to tick back up as the government tries to get more money in, we think the way we do things, which we feel is the right way, will add more value as that audit rate ticks up and we see more clients be audited in the future.
Excellent. That's good to know. Well then, Joel, I just want to say thank you very much for participating today. If anyone who's watched this has any questions for me or for Joel about anything with regards to what we talked about today, we'll post Joel's contact information with the video, so you'll be able to find it there. And so I just want to say, Joel, thank you very much. I've always liked working with you over the years, and thank you very much for sharing with the listeners of Kevin's Corner.
It was my pleasure.
All right, bye.